So today we're facing a very serious situation that will have an impact on many Canadians. And what we're witnessing happen today is a significant disruption in global markets in response to a number of factors. So what I'd like to do is break down a few things for you. What's happening today and why you should care about it. How did we get here and what this means for our country, and what are the next steps that the government should be taking in this situation, and then what are we doing as a party to make sure that they do those things. So let's start with what's happening today. So for those of you who are watching the news, you'll notice that we're witnessing a significant stock market plunge. So today stock markets dropped precipitously across the board. In some North American stock markets were actually halted. So in terms of Canadian markets, the Toronto Stock Exchange lost more than 1,400 points, or 8% within minutes of opening. And when it reopened after a halt, it was down as much as 1,600 points. And to put that in perspective, it was the worst day since 1987 for the TSX. And this is reported on the CBC. We've also seen today a major decline in the price of oil, with WTI decreasing from over $50 per barrel to around the $30 a barrel mark. So why is this important to you? So when events like this happen, what it materially means is that the value of assets have evaporated. And when something like this happens, what it means is that employers and investors, they have to look at project viability and where they're going to spend capital. So if projects or productions are canceled or reduced, it means lost jobs and wages. And of course, as an Alberta MP, regions like mine, where there's already a jobs crisis, these events have very significant implications. So certainly this events today, depending on how long it lasts for, it can have an impact on seniors and retirees, because it affects the value of pensions, and that can also have an impact on governments in terms of needing support for that. Lower commodity prices obviously have an impact on government revenues. So, for example, the price of oil is often factored into any budget, be it a provincial budget, especially in Alberta, or the Canadian budget, because it has a large impact on revenue. So a drop like the one today will undoubtedly have an impact on government revenue. So how did we get here? So today's plunge, if we just look at it in a bit of a vacuum, is being attributed to two things. Fears around the coronavirus spread, and we're seeing a spread happen. And then a price war that's happening between Saudi Arabia and Russia when it comes to the price of oil. But the problem is in Canada, we have a set of economic conditions that are actually, I think, making us a little bit more susceptible to potential impacts of today's events, because we were already seeing economic decline ahead of today's events. And of course, you look at the crisis that my province was at, that was precipitated by things like Bill C-69, C-48, the vetoing of major energy projects, increases in taxes, increases in the regulatory environment, the blockades, all of these things all of these policies that the Trudeau government has put in place over the last 4 or 5 years has really put Canada in a very precarious economic situation. And worse, we've seen the federal government under Trudeau spend into oblivion in times when we should have been putting our house in, like making sure that we were in the absolute strongest order possible, right? So we know that the deficit right now has ballooned to $28 billion. In the last 4 years alone, Trudeau has added $72 billion to the national debt. And for what? Like, why are we adding to the national debt at this level? When Trudeau came into office in 2015, we handed him a balanced budget. We are now in a situation where not only are we seeing investment leave Canada, this was even prior to today's events, right? Because of some of these policies, but we're also not in a particularly great financial position. We've seen metrics like the debt to GDP ratio increase. So what happened today, we have to look at it in the context of the fact that there's been a lot of political decisions made by this government that will actually have an impact when you look at what the events of today, right? So that's what I'm concerned about. So what are the next steps that the government under Trudeau, he is in power right now, what should he be taking? What should Canada be doing in this situation? We don't know. I've been watching the news and getting briefings all day today. We don't know how long this is going to last. Like there's the analysis on what's happening in the markets is still sort of being undertaken. But we need to be putting some action plan forward in terms of what Canada should be doing to respond to this, to make sure that our economy is protected and strong. So that's why yesterday, if you had a chance to watch, my colleague Pierre Poilievre, who is our Shadow Minister for Finance, he went out and held a press conference ahead of the federal budget, which is expected to be delivered sometime in the next few weeks. And he said that the government needs to be doing a few very concrete things. And this is what we're going to be putting pressure on them to do. So first of all, ensure that we are cutting taxes for workers and entrepreneurs to reward investment and work. So why is cutting taxes, why is that important? Well, in a time where businesses might be having an issue with liquidity, we also need to be looking down the road at what potential impact the coronavirus could be having on supply chains, on labor, that sort of thing. Cutting taxes will make the investment climate more stable in Canada. And so we've asked for that. We've also asked for changes to the regulatory environment in Canada. Many of you know that the changes that the government have made the investment climate very uncertain because of the regulatory burden that's been added. So we asked for a 2-for-1 rule to eliminate red tape. We asked for a reasonable plan to phase out the deficit over time so that Canada can be in a more resilient situation. Basically, what that means is that the government is spending money on a lot of things that really aren't attributed to growth. There's structural deficits, and we need to be looking at those things to make sure that we have finances in place and a fiscal climate in place to weather this storm. Ending corporate welfare for favored companies, and an end to wasteful spending that we've seen over the last 4 years. So this is what we're asking for, and this is what we think that the government should be doing so that we're putting Canada on as stable footing as possible given what's happening today. What are we likely to see from the Liberals? And I want to explain this to you so that you can watch this happen over the next few days and add your voice to making sure that it doesn't. I've watched the Prime Minister in the last couple of days use words like we need to transition, or using the terms economic diversification or stimulus. My role as Shadow Minister for Industry, and I want to talk to you a little bit about what that is code word for. So when we talk about what the government has spent a lot of money on over the last 4 years, they have just spent a lot of things that there's not a lot of measurable outcome for that spending on. So when they talk about economic diversification, usually what that's code word is let's spend a bunch of money on programs that don't have clearly defined outputs when it comes to job creation. So I asked for the Parliamentary Budget Officer to conduct a review of something called the Supercluster Program. This was a program that the government put hundreds of millions of dollars, I think it was actually over $1 billion into, that was supposed to create jobs, that has created 0 jobs to date. And it's been sort of rounding. I was even in committee, even my NDP colleague was asking questions about the outcome of all of this money. Where is it going? What's going on there? We can't let spending tax dollars be a metric for economic growth or diversification of the economy. The reality is that, look, if you're listening to this today and you were considering starting a business, you would want a few things to be in place before you took that risk, right? You'd want a low tax environment. You'd want to make sure that you have a stable supply of talented labor. You'd want to make sure that the regulatory environment that you're in is stable. And for those of you who are creating new inventions or, trying to commercialize new technology, you'd want to make sure that the environment in which we protect intellectual property in Canada is stable. And this is why we've been questioning the government on concessions that they made in the new NAFTA agreement that we think will make it less likely for intellectual property to be retained in Canada. So the point I'm trying to make is that they're going to be using these code words, whereas we really need to be focusing in the first instance on ensuring that the overall economic climate in Canada, those factors that I just talked about, are in place, because no matter how much money the government spends, we're not going to see economic growth if we're not competitive with jurisdictions like the United States or other major economies, right? There needs to be stability. It needs to be an attractive place to do business. A few other things that I want to make sure that you realize as the government talks about this is especially when they talk about energy prices, boom and bust cycles are not unique to the energy sector. They happen in many other industrial sectors in the country. A large percentage of our economy is natural resource based, not just in energy, and is subject to economic cycles. But there's a few other facts that I want you to be aware of as well. Global demand for oil and gas remains high, and even with the softening right now related to the coronavirus, in recent times we've seen demand continue to grow. So we have to make sure that Canada is positioned in the medium term and to the long term to be a supplier of energy, especially even if we're looking at transition away from that as in the global economy, because the reality is that we still use this product in many instances. And if we're not providing it, other jurisdictions around the world that don't produce it in a clean or an environmentally stable way will do that to meet global demand. The other thing that you need to understand is that the oil and gas sector in Canada is by far an order of magnitude the largest spender on clean technology in Canada. So anyone who's celebrating this, I seriously hope you're not, but for anyone who's celebrating this drop in oil and gas prices today, this is bad news for the clean tech sector, right? Because if there isn't capital in the oil and gas sector, it's not going to be there won't be as likely as a receptor capacity for clean tech. So we need to make sure that the government is putting in place these overall macroeconomic policies that will allow for growth, allow for investment, and they have to walk away from the path that they've been on for the last 5 years. So my colleague Pierre Poilievre, he did hold that press conference yesterday. And actually today, Conservatives are debating an opposition day or a supply day motion. We're asking the government to produce documentation, any documents that they've had in recent times that have shown potential economic signals that could show that Canada is not in a resilient position to deal with these issues. So we're going to continue to push the government on this. We're working really hard. You can tune into that debate today, but don't buy the liberal spin on this. Make sure you're staying on top of it, and share this video so that people can get a bit of an understanding on what's going on today in terms of the Canadian context and what we should be doing to make sure that we weather this storm. Working hard for you. Have a great day.